welcome. You're watching India Market Open. It's been an exciting week, guys. It's Friday finally, and it was a day of records of sorts from the US to Japan to India. All markets sitting record highs.
What a blockbuster 24 hours it has been for anyone who tracks, trades or reports or looks at markets across the world. The Nikkei closed at all-time highs. The S&P 500 closed at all-time highs, and our very own Nifty closed at all-time highs.
There's a bit of a common ring to India, Nvidia. It kind of seems similar, right?
Oh,
the gains that
are you saying because you're Niraj?
I didn't think of that, but yeah, there is a small ring to that as well. Yeah, but quite stunning, really, what's happening out there in the world, and quite stunning as to the fervor around India. Chris Wood's note, latest that has come out, speaks about or reiterates the 10 trillion market mark and how India is the best market from a medium-term perspective. Lots working.
Stunning. Stunning is definitely the word to describe what's been happening, and we'll just take you through all of that. So, new highs on the S&P 500, all US indices up in the green with a solid gains at that. The Dow, Nasdaq, of course, and it's all about Nvidia. Nvidia, after a big run-up yesterday and monster quarterly results, has again run up 16%. It has now become the most valued company, the largest company as per market cap in the United States. Has beaten all of its magnificent 7 peers, its mega caps or whatever else you might call it. So the chip maker who's on the AI bandwagon has just stormed the world. And just hang on for a little bit on this segment, because at the end of it, we're going to tell you how you can invest or, get onto the Nvidia bandwagon if you wanted to. But right, that's the story as far as the US markets goes. Data also came in yesterday, and that was an important bit. This was jobless data, which fell to 201,000 last week versus an estimate of 216,000 jobs. So your joblessness is, growing at a slower pace than expected. Again, an indicator of a hotter U.S. economy and a stronger U.S. economy. So we come back to that whole question about rate cuts, etc. That seems to be moving behind. But markets don't seem as bothered. You've had a slew of comments overnight from Fed officials saying that hang on, wait, there might be some cautiousness as far as rates are concerned. Look at the U.S. 10-year also, and that's projecting that kind of nervousness as far as rates are concerned. So 4.3% on the back of rate cut uncertainty. You've settled a little firmer there. And not to take away from what's happening in markets, at least on the equity side, completely positive flow. Asia, let's just pull up Asia. And, Japan is shut today for a holiday on the emperor's birthday. The rest of Asia opened fairly comfortably. Right now you have mixed cues, and like we said, the Nikkei closed at all-time record highs yesterday. So a decent setup as far as India is concerned.
Yeah, and resilient economic activity, right? The flash PMI data yesterday just leading to this kind of positive momentum. And I may be in a minority who somehow saw a silver lining in the MPC minutes as well, because there's so much chatter around just one focus about rate cuts. I know Citi said that post the MPC minutes, they have pushed out the rate cut assumptions to, I think, October or thereabouts. But I don't know. I mean, who knows if the Fed acts, and I know the Fed is not likely to act based on all the comments that we're getting. But somehow, I don't know, just that economic activity, the chatter around rate cuts being so high or rate action being so high, somehow some constructive cues. I don't know if the two of you agree with that or no, but just, sorry.
I'm going to add to one more constructive cue. So there was this data that came out where overseas investors who do not have direct access or license into India's debt market are actually going after supranational bonds. To put a number to that, that is indirect exposure to the Indian bond market, and this is all ahead of the inclusion to the JPM index and, of course, the elections, which are around the corner. $3.2 billion. It's a 5-year high on the amount of supranational bonds that was subscribed to in 2023. So if you can't get India to direct access, you're playing proxy India by entering these bonds and accessing these markets. So yes, those reports, equity markets, debt markets, nothing seems to be stopping us.
Yeah. And just on the MPC and the rate cuts, more and more consensus that the Reserve Bank of India may not have to wait or may choose not to wait for the Fed to make the first move. Those voices coming in more and more fervently. You might see something as early as August as far as India is concerned, even though the Fed may act in October.
Yeah.
So
that will be a first of a type in sorts. It's not happened in over a decade, I think, where the RBI has cut rates before the Fed.
So just that, except for the COVID period wherein we acted.
Yeah,
not
and we were more monetary fiscal, so that was a different aberration.
But yeah, so somehow, like I said, I may be a minority, but somehow it seems that that PMI data plus this MPC minutes, does it kind of make it but constructive maybe? And the technical data, VIX continues to stay subdued, if you will, and lower volatility is great because everybody was saying that maybe volatility just keeps on edging up closer to elections. Somehow that hasn't happened. PCR is not really out of bounds. Yesterday was about 0.89 or thereabouts, so not out of bounds and not out of whack. And quant indicators still conducive for steady up move. So we had an up move yesterday. We kind of yesterday spoke about it in the trade setup too. Hopefully, from a bull's perspective, that continues. And just from a sector perspective, somehow it just seems that what might be the center of attention might not be India dedicated moves, but driven by China, because metals just so firmly in play. Every second analyst on the channel for the last 3 days, or the last 2 days that I've been anchoring, and the one day that I watched it, somehow spoke about metals all through and through. And so if China-led moves on metals, plus policy-led beneficiaries, we've seen what's happened to space stocks yesterday. Sona BLW will be a case in point today. So I think the policy-led beneficiaries somehow continue to remain in the thick of action. So that's a pocket one needs to monitor.
I think bulls are looking for triggers.
Yeah,
there isn't too much in terms of triggers. Your earnings season is behind us, and this is, I guess, not just locally, right? Globally as well.
Yeah.
You don't have too much to look forward to apart from elections all over the world. And both of you mentioned China. While China is the trigger for metals in India, this is one thing I think investors and traders will keep on the radar, because if China picks up in terms of this liquidity push, if we as a beneficiary of a liquidity push in China is helping metal stocks, I just hope it doesn't spoil the party for Indian equity markets when it comes to foreigners.
Sorry.
Yeah.
No, after you.
So that's a set of questions that, I've been asking analysts through the week on the various shows we do. So 2 points of view over there, and that's an interesting one, Samina, that initially some of the money will go to China at India's cost, but overall, as the quantum improves, when confidence in China also builds up, India will long-term also be a beneficiary as part of the EM basket.
And I think the good news is this market is all about DIIs. The incremental money still hasn't come in, but the markets still seem to be making record highs.
Look at what happened yesterday.
Something to be excited about.
Absolutely. Look at what happened yesterday. DIIs net buy 1,800 crores, 1,824. FIIs net sale 1,410 crores. So you've hit new highs with DIIs pushing through.
No, just one point before we get to stocks or maybe something else. But yesterday, Nomura put out this note wherein the talk around EMX China. EMX China is 2 billion incremental flows out of the 15 that have happened in the past 3 or 6 odd months at the data that they're analyzed. So EMX China is not that great, and if anything, hopefully a China revival spurs EM flows, and those EM flows maybe also aid the policy or the passive flows towards other EMs like India. So who knows, it might work quite conversely to what everybody's penciling in.
Well, like we said, bulls have a mind, markets have a mind of their own. We will choose to see the glass as half full or half empty. But for now, it's looking great. It's been a very strong run. Global equity markets, like we indicated, from Wall Street to Japan to India, made records highs in close yesterday. This morning, GIF Nifty is indicating to another positive start. So lots of Friday cheer potentially could be on the street. We can't rule out consolidation, but for now, it looks like it could be a pretty good start in early trade. Earnings are pretty much behind us, so now the focus is seeming to be largely fundraising for a lot of companies back home. We'll start by taking you through the big stocks and news that we are tracking this morning. The first one on my list is Vodafone Idea. They've, of course, reported to the exchanges that they will be conducting a board meeting on the 27th of Feb to consider fundraising plans. They also said that the board will consider, evaluate any and all proposals for raising of funds in one or more tranches, either by the way of a rights issue, FPO, private placement, including a preferential allotment, qualified institutional placement, or through any other permissible routes. Watch out for this one. This could be in focus. Clearly, Mr. Birla has indicated they're not looking to exit the business. They're looking for only additional funding, and various routes to do so will be considered. The stock was a big gainer in trade yesterday. May continue to see a little bit of movement in today's day of trade as well. Well, like I said, it's a season of fundraising. Angel One as well has indicated that they will be looking to raise 2,000 crores through a preferential issue, QIP, or any other modes. This announcement or notification came in late last evening. They've said that the purpose of this fundraise is to augment and build financial flexibility to grow the business and harness various emerging opportunities both within the existing broking business across the inorganic universe within the fintech space. So that's why they're looking to raise money. Remember, they posted earnings. It was a spectacular quarter for Angel One. The numbers more or less ahead of expectations for most players that are servicing the capital market. Well, apart from that, IRB Infra as well usually reacts to news points quite significantly. The company has also approved raising FX bonds this time, $550 million worth of FX bonds. The stock went up higher yesterday. Could continue to see some interest in today's day of trade as well.
Yeah. Just on Vodafone, what a run-up for a company that everyone wonders how long it will last. And yesterday, all the focus was on Kumar Mangalam Birla speaking about his foray into the paints business. But a very important comment he made when asked about Vodafone, that we have no plans to exit the telecom business, and we're looking for more investors. And massive run-up on that stock as well.
I think Indus Tower would be in focus because of this as well. Frankly, if Vodafone does what it does, Indus Tower is in the ban, but won't be surprised to see Indus Tower actually have a good move today as well.
In fact, I think the Birla Group has been in the news all week, actually, from Novelis, Hindalco, now the paint business, and of course the fundraising plan for Vodafone idea.
Well, IRCTC, another stock that is on our radar today, they have gotten into a pact with Bundle Technologies, that's the company that runs Swiggy, for supply delivery of pre-ordered meals. And I found this quite interesting. So the first phase of supply to include Bengaluru, Bhubaneswar, Vijayawada and Visakhapatnam stations. So you can essentially get your pre-ordered meals at these stations from Swiggy via IRCTC. And an interesting move for a company that has definitely shown promise in not just, sticking to the lines of what its mandate is. And that stock, say, over the last 3 months has been up about 33-34%. So definitely one that I would watch. Pratap Snacks is the other one. I mean, the snack attacks on Pratap Snacks are never ending. So they have issued a clarification to a newspaper report that said that ITC is looking to buy a 47% stake, but through Peak XV. Now, Pratap Snacks has denied that it's not in any negotiations with ITC for stake sale. Now, that's quite different to what the news at least was, because the news was not that ITC was in negotiations with Pratap Snacks, but with a VC who has a 47% stake. So we'll have to see how it responds. Remember, just about a month ago, this same stock was up on news that Haldiram's wanted a bite out of it, and they had denied that story then as well. Just the third stock that I have on my radar is a company called Paisa Digital. Now, it's a small cap NBFC company. Its 1 month rise is 53% and a whole slew of news. So the latest is that the board has approved raising up to 1,260 crores via QIP. They will also be considering allotments of NCDs through private placement. So they're on a fundraise spree as well. They have recently tied up with Bank of India. They have a tie-up with SBI. So, banking and financial inclusion in rural areas is a focus. So an interesting stock to watch, and we'll see what it does today. But so many more to talk about.
So much more to talk about. I think one of the key stocks today could be Sona BLW or Sona Comstar, because it's received the PLI scheme certificate. for traction motor for electric two-wheelers. The City Note kind of lays this out as well, that the company is the first automotive component manufacturer to receive this PLI certification. They apparently filed some 7 applications. They have gotten this. Very likely, I mean, and the stock was active day before yesterday as well, but very likely that because of this particular piece of news, Sona could be one key stock to monitor in the session today. We, of course, try and get the management as well, but this would be a very interesting one to monitor. So watch out for the price action on this one. We already spoke about Indus Tower, but watch out for Honasa Consumer. There is a City Note out there. They've initiated with a buy rating and a target price of 550. Most importantly, the last 2 lines on that note, wherein, I mean, aside of the fact that they are seeing strong business prospects, robust growth opportunity, etc., 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 they are saying that the estimated consolidated revenue will post a 25% CAGR till 26. Estimated EBITDA CAGR growth will be 55%. Now, if Honasa does manage to do that, usually growth takes care of expensive valuations. Is Honasa expensive? It certainly is. But is a 50% CAGR, if they manage to do that, take care of some of that valuation piece, one would reckon that maybe it does. So that's the other stock to monitor in the session today. Aside of clutch of brokerage news. Sorry, you wanted to make a point?
No, go on. You finish your brokerages. I want to talk about the smaller companies.
Oh, okay. Yeah. So, no, just this. I think Citi's also hiked the rate on Concor. So that is to be monitored. And Goldman has this very large note. I'm sure Harsh later on at 9 a.m. will bring this out in detail. But we're talking about how banks are not quite seeing the uptick. Goldman, in its note, speaks about Goldilocks period over and multiple headwinds ahead. They have downgraded SBI, ICICI, and Yes, and they have upgraded Bajaj Finance to a neutral. Something that Citi analysts yesterday on the show also stated that they are now believing that the large downticks that have happened in NBFCs are behind, and they have upgraded Bajaj Finance to a buy as well after the correction mode that's happened.
Niraj, because a lot of the active fund managers have actually, towards the end of Jan, increased their exposure to financials, more specifically to private banks.
Yeah.
So while brokerages putting on these reports are not sold on the space, the guys who are actually making the moves are upping their bets. So
and still not making money. So it would be interesting to see if banks make
money,
money
I don't know
not.
when it's coming.
HDFC is prime example of, the kind of interest in private banks as well.
So I think 4 large brokerages, not brokerages, pardon me, mutual funds, Parag Parikh, HDFC, AMC, Kotak, did increase stake, or they're holding in the HDFC Bank towards the end of Jan. But
just the valuation argument, that is Bajaj Finance oversold and can it recover? And I think the same argument people would start making at some point of time on OMCs as well. That's the last piece that I have. The stocks have corrected so swiftly that does it at some point of time make them valuable? Because again, right, the earnings trajectory, as the Citi analyst mentioned yesterday, still appears so strong that they are saying that we have bought into this weakness and continue to buy into this weakness. And I heard that talk from 2 key South Mumbai-based large individual investors who mentioned that they are constructive on OMCs after this move that has happened. Maybe if there is a pricing action happens, that marks the bottom for these stocks, because that's the last of the bad news. The overhang goes away. The valuations are great from an earnings trajectory perspective. So watch out for OMCs as well. Could be interesting.
I think OMCs has been, it's been the
2 days,
flavor.
2 days, 2 negative notes. And
suddenly the mood changes, right?
Yeah, in 24 hours, how do those fundamentals change?
And it's funny because, you weren't there, but Niraj and me spoke to Probal Sen, and he said he was going back to the drawing room every 48 hours to review his rating upward. There was no downward concerns.
Yeah, exactly.
But like you said, the tide changes very quickly in these markets. But mention of a very small recent listing, Jana Small Finance Bank, listed on the exchanges on the 14th of Feb. 13th of Feb, pardon me, posted numbers. It's a 4,500 crore market cap, so not a very large company. They did post earnings. It's their first earnings, so I'm going to mention it in terms of post-listing. They've recorded a 13% year-on-year growth in net profit, reported at 134 crores for the quarter. Net interest income also grew by 24.5% to 550 crores, and asset quality has actually improved Q on Q, with gross NPAs falling 25 basis points Q on Q to 2.19, and NP is also seeing an improvement. So the stock could be in focus. It was up about 4 to 5% in the last 3 odd trading days. We've talked about a bunch of fundraising plans. I'm not sure if you mentioned Texmaco. They as well will be meeting. The board of directors have a scheduled board meet for the 27th of Feb to consider proposals for raising funds. So those are the 2 more that I wanted to add. But anything else? I think it's back to being global.
Yeah, just only because the NVIDIA story, I think, is astonishing and deserves a little more time in terms of what it's done, and so many questions over there. So AI is expected to be the game changer, not just for this year, for the next decade. If there is one company that puts it all together in, okay, so how do you buy into this? NVIDIA is right there. They're in chips, they're in AI. They've risen 16% just overnight, single biggest rise since May. 265% increase in revenues in Q4 year on year. It's ridiculous. Management continues to be positive. The question over here is how far, and maybe a deeper discussion at some point on what Indian companies are doing, our Indian IT companies or your big 3 or your big 4, anywhere in the AI game at all. But meanwhile, we have Mihika standing by, and she's got this special report together, not just on NVIDIA and how we're sitting from afar, gobsmacked at how well it's doing, but how you as an Indian investor can get on the bandwagon. Meka, talk to us about how our viewers, our investors here in India can grab a piece of the pie.
Yes, it's rather simple. There are 2 investment routes you can go about. First is a direct investment route where there are 2 options. One is to open an overseas trading account with a domestic broker like an HDFC, Kotak, or an ICICI Securities that do offer access to an international market. This does require KYC verification and could also have some currency conversion fees applicable, since the funds deposited in the account have to be denominated in US dollars. The second way via the direct investment route is to open an overseas trading account with a foreign broker that does have a presence in India, like a Charles Schwab or an Interactive broker. In the indirect investments, 3 ways to go about it. One is a mutual fund schemes that do have an exposure to the international markets, or you could also purchase a US ETF via domestic or an international broker, or purchase an Indian ETF that is based off international indices. However, it is key to note that the RBI's LRS scheme does only permit an investment up to $250,000 per year for an Indian resident, and there are also certain additional charges that do get included. The first one is the TCS, which is a 5% TCS on the remittances exceeding 7 lakhs. This is not on the whole amount, only the amount that exceeds the 7 lakh value. The US also taxes dividends at a rate of 25%. However, an Indian investor can claim credit in order to avoid double taxation. There are also capital gain taxes that may not be liable in the US, but they are liable on the income gained in India. And there's also brokerage fees and foreign exchange fees, since you will be investing in an international market.
Yep. Thanks for that, Mihika. So remember, this piece now continues for a while, but because NVIDIA has grabbed eyeballs, I mean, this would have happened at some point of time when Apple hit the 3 trillion mark as well. And currently with Microsoft, Apple and NVIDIA in that pecking order, but because of the NVIDIA gains that have happened, suddenly the desire to invest in global companies comes to the fore. So multiple ways in which you can do this. Mihika, thanks for putting that out and putting that into perspective. Viewers, a lot of very special coverage on NDTV Profit starting next week on the Big 7. So something that we'll cover on this show and throughout the channel starting Monday as well. So that will be interesting. But Alex, while I'm coming over, you want to lay the context for what we are trying to do on the editor's cut today.
So just to put things in perspective, since Niraj, you were talking about NVIDIA right now and the gains have been stellar. I'm looking at the 1-year stock performance. It's about 230 odd percent. And a couple of the stocks in the basket that we're talking about today have gained about 140% each. Look, it's not the same, and they're completely different scales altogether, but there are opportunities in the Indian market as well, and that's essentially what we're trying to lay out. Yeah. The hotel space is what we're talking about. And we don't talk about it very often, but I think every time a hotel CEO comes and speaks to us, they talk about COVID-19 because it meant a lot to them. But every time they speak to us now, they're saying it was a bad dream that we've kind of forgotten, and there's a reason for that. But the question we're asking today, Niraj, is Our hotel stocks right now, at least the 4 big ones, more or less, that we track, are they overvalued? Is it in the price, the outlook that they're laying out?
Yeah, I'd love to banter with you on this, by the way. But just laying the context first, it's been a great year thus far. So Q3 as well, if you just look at the kind of statistics, just laying them out for you, aided by increase in ARR and occupancy as well. So Indian hotels achieved the highest RevPAR, which is the used statistic, revenue per available
average
room, right? A growth of 25%. RevPAR for EIH's domestic network was about 23% as well, and that's not a large by market cap company, but a largest chain nevertheless and growing. Chalet hotels occupancy rates saw 630 basis points uptick. Now, you could argue some of it could be because of the World Cup, but beyond that to 630 bips is a very large uptick as well. So Q3, net, I mean, I can go on with statistics, but this was largely what happened on the quarter 3. And I was looking at brokerage notes and what people have said. So Motilal Oswal note on the Q3 performance put it very aptly that ARR for the hotels basket, including ITC, grew 13% YOY. And the basket reported strong financial performance as revenue EBITDA grew by 21% and 32% YOY. Now, this is strong statistic, right? So what we're trying to say is that the numbers have looked very solid for the hotel companies thus far.
Right.
The question mark only comes in is because of what you just said, that the kind of gains that the stocks have made over the last 12 months or 18 months as the case may be, and is that kind of factoring in the best of earnings trajectory. So I've done 2 comparisons, Alex. Okay. One is the absolute PE multiple. Actually, that's not a comparison. This is a depiction.
Sure.
And I've used the trailing 12 months because they were strong as well. So you could argue, I mean, I've not used FY25 or FY26 right now, but just the trailing 12 months easily available as a metric. Look at Indian hotels, a market cap of 82,000 crores, which is great, but on a TTM PAT of 1230, and the trailing 12 months PAT means till December. So effectively calendar year 23 earnings, it's trading at 66 times.
67 practically.
Yeah. EIH 47 or 48, Chalet Hotels 76 times. These companies, especially Chalet, I remember was down in the dumps during COVID. It's now trading at 76 times. Typically what happens with cyclical businesses, down in the dumps to the top of the world. Right? So on PE, that is the case. Price to sales, 12 times price to sales. Now you tell me, how does a cyclical business get a 12 times price to sales multiple?
So it is the bet, and it's not just betting. While you've taken the trailing, what a lot of investors are betting on is the outlook going forward as well.
Agree completely, but my limited point is, so TTM would be completely irrelevant if the growth is only in the future and not done in the past.
Sure.
The reason I'm more comfortable using TTM as well as a benchmark here is because the last 12 months have been fabulous for these stocks.
Right.
You discount it by a bit. 66 might become 50.
Yeah.
Or a price to sales of 12.5 might become 9.
Yeah.
So
what you're saying is, despite the outstanding performance, the multiples look great.
Just look slightly expensive. And just one last point out here, or 2 last points here. One, the comparison. Now, people are talking about global money coming into Indian stocks, etc. I chose Minor International, which a Thai-based chain has a clutch of hotels out there. And just look at the comparison of Minor versus the entire listed hotel space in India. The only exclusion out here is Kamath Hotels because it's had an erratic last 12 to 24 months. So I've left that out. But I've included the PAT of all the listed entities, Indian Hotels, Chalet, EIH, Oriental Hotels,
Lemon Tree,
Benares Hotels, Lemon Tree. I've included everything, okay? So everything included, the PAT for Indian listed space is 26 million. This one is 600. Revenue, $4.1 billion. This one is 1.73. And minor trades, as you look at it, versus at a revenue to sales, market cap to sales, of about 1.5 times.
Okay.
And our companies are trading at 12 times. So I'm just saying that some sanity, guys, about the valuations. But the outlook, just to give credit, the outlook is still buoyant, Alex. Very quickly, CAGR of 8 to 10%, supply. So our demand will grow at 8 to 10% is what most hotel chains have said. Supply is only 5 to 6%. So the imbalance
therefore, occupancy is expected to remain good.
Yes. And the new convention centers are actually adding. Just leave you with a statistic. One event in Geo Convention Center apparently led to full occupancy for all the neighboring hotels in the BKC region. Apparently happened in Delhi as well.
So
that's
therefore, the point that a lot of people make about these hotels losing business on conventions, which used to take place there, and with these large convention centers, they're not losing, of course, on residents and on occupancy.
Exactly.
Because people have to stay somewhere.
Yes.
But the other last point that I want to ask you about is there are a couple of hotels. I know that Lemon Tree is moving its model where traditionally we've spoken about hotel businesses being highly capital intensive and them having to build their own rooms, etc. Some of them are now looking at having only the ownership of the brand.
Yeah.
Is that something to look at very closely?
But done for a while now. Shall has been doing that for a while. Rather, Shall has not been doing. The others have been doing for a while. Indian Hotels, Lemon Tree, etc. So horses for courses. Some people believe they want to own the assets. Some people are saying higher ROCs are better. To each their own, I guess.
Okay, so exciting space nonetheless, maybe just a tad bit expensive.
We're asking that question.
Absolutely. Viewers, you should let us know what you think. If you're holding on, are you planning on adding more based on what Niraj has just laid out? Let us know in the comment section. In the meanwhile, we have to slip into a very quick break, but we've got more action on the F&O space to talk about after a very quick break. So do stay tuned.
Welcome back. You're watching India Market Open. I'm stepping in for Ragam and going to do my best to try and explain the F&O piece before we go across to Aditya Arora for his top F&O trades for the day. First up, that's where the Bank Nifty currently stands at. Remember, the trading range that we've seen for Bank Nifty clearly lies between 46,650 and 46,750. Momentum is strengthening up around levels of 47,400 and the 47,600 zone. On the open interest, Bank Nifty futures have lost 0.1%, while the OI has declined by 7.5%, implying major unwinding of long positions. Bank Nifty PCR as well for the monthly series is at 0.91%, and significant call writing was seen at levels of 47,000 and the 47,500 strike, and 47,000 and 46,500 puts. So, implying a trading range anywhere between 47,500 on the upside and 46,500 forms the base for Bank Nifty. That is the activity on Bank Nifty. Let's quickly pull out what's happening on the Nifty 50 spot as well. Maximum call writing has been seen at levels of 23,000 strike. Maximum call open interest was also seen at levels of 23,000 with 1 lakh contracts followed by 22,000 and then 22,800. On the put side, maximum put open interest was seen at levels of 21,000, which will, remember, act as a key level of support for the Nifty is what we are seeing. And you've also seen put writing at 21,000 followed by 21,900 and 22,000. And put unwinding was seen at levels of 23,000. So that's pretty much going to be the trading range for the day. On the upside, you've got 23,000, and on the downside, support forms at levels of 21,900 followed by 22,000. So the activity expected to be range bound. On the Bank Nifty, it's 47,500 on the upside and 46,500 on the downside. We have with us Aditya Arora now, who's joining in with his F&O strategies as well. Aditya, before I jump into Wipro and Indus Tower, very quickly, where have you seen maximum activity and what is the trading range on the Nifty? Since we don't have Agam to wrap that up, so if you want to just take that away and tell our viewers what's the call on Nifty and Bank Nifty before we do the stocks.
Absolutely. Very good morning to you and to all the viewers. I think we saw maximum activity at 22,200. Previously, call writers were very active because we saw rejection at this point multiple times, 2 to 3 times we saw rejection at 22,200. So call writers were pretty confident that this mark wouldn't be taken out, but surprisingly market went down and tables turned because call writers got trapped at 22,200. Now we see significant put writing at 22,000 and 22,100. So bears are clearly having an upper hand over here, and I think technically also market has took a lot of time to consolidate the gains, and we saw a sideways market now. Yesterday was a very strong move led by IT stocks and heavyweight stocks like TCS, Infosys, and this PSU banking space. So I think the market is in pretty good shape, and this breakout must be trusted because if the breakout is true, then there's more upside of 200 to 400 points here, which could take Nifty to 22,400 to 22,500.
Fantastic. Let's talk about the top trades that you're recommending. I believe you've got one strategy on Wipro. You want to take our viewers through that one?
Absolutely. So I think IT sector was the star performer yesterday, and we can see the sentiments spill over today as well. And IT could do well today also. So Wipro is a good candidate to go long. Over here, we can sell 530 put option at 8.35, 12.50 should be the stop loss, and 4 rupees and 2 rupees should be the target. So the bias is neutral to bullish. And the second stock is Indus Tower, wherein we can sell 225 put option at 2.5, 3.7 is the stop loss, and 1.30 and 0 is the target.
So just to recap, you've got a bullish call on Wipro where you're selling puts, and you've also got a bullish call on Indus Tower. Is that correct, Aditya?
Yes.
Okay. So thank you very much for joining us. That's Aditya Arora, very constructive on the index and also bullish on Indus Tower and Wipro, where he's selling puts. In the case of Wipro, he's selling puts of 530, which his current price is 8.5. His target on that is 4.2. With Indus Tower, he's selling the 225 puts, where the current price is 2.5, and the target on that one is 1.3 rupees. So two constructive calls there, guys. Aditya Arora clearly very constructive in terms of F&O data for the markets.
Yeah. And very likely that, I mean, just the Indus Tower strategy with the time horizon so low for the expiry, and if the stock is unlikely to fall, then it's a bit of a no-brainer, if you will, right?
Yeah.
Just sell this put option. Very unlikely the stock will go down, and therefore this put will expire worthless. Maybe he'll break it up before the expiry happens. But that could be an interesting strategy for sure.
Something you mentioned as well in the context of what's happening with Vodafone and the whole telecom space. So fundamentally as well, a lot of news as far as Indus Tower goes. But so many more stocks to discuss this morning, and we want to cover as much as we can before trade so that we set you up. Varsha is joining us now with her list of stocks in focus. Take it away, Varsha.
Good morning, guys. So let's start with Salasar Technologies, wherein RVNL and Salasar JV has emerged as the lowest bidder from Madhya Pradesh Power Transmission Company. Now, this is for construction of transmission lines and associated feeder base for a project cost of rupees 173 crore. The project needs to be executed within 18 months. Then we have Jupiter Lifeline Hospital, wherein a company has leased land for 10 years in Pune for setting up a hospital with an annual lease rental of rupees 9 crore. Now, they'll have an option to purchase the land after 3 years. Also, they're going to add 500 beds in a proposed hospital over 3 to 4 years with an investment of rupees 500 crore. Then lastly, we have Dilip Bilcon, wherein they've executed concession agreement with Public Works Department, as Government of Goa, to construct observatory towers, parking, etc. for new Zuari Bridge. Now, the project cost is at 270 crore with an estimated time period completion of 60 months.
Okay. Well, thanks a lot for that, Mihika. So that could be interesting. Some small orders, this Dilip Buildcon keeps on winning, so it could be an interesting one to monitor today as well. At times, I've seen the stock react very large on some very small order wins as well. So pretty interesting. Boon se.
Samundar बनता है.
Gujarati में they're saying
Sagar. Close enough.
So close
Sagar
enough.
Samudra एक ही है.
No, but so the Gujarati version is टिपे टिपे सरोवर भराई.
तो ऐसे बोलो ना, अच्छी
Same
बात
thing.
है यार.
अच्छी बात
दिलीप
है.
बिल्कॉन के लिए.
Yeah, I don't know. We are not aligned to anything, but it's an interesting one. Sometimes you see the stocks react the way they do. Avinash Gorakshekar joins in to talk about this. Avinash, good morning. Thanks for joining in. And it's interesting. Would the boon se sagar bharna hold true for paint companies as well? Or will it hold true for the incumbents? What I mean is, could Grasim do the trick when it comes to paints and gain market share at the expense of others? Or do you reckon that the incumbents will kind of manage their domain well?
Yeah, good morning, Niraj. See, I think clearly, Grasim has outlined a very aggressive strategy to enter the paid market. But I think clearly, at least for the next 1 or 2 quarters, I don't think it's going to impact, market majors like Asian Paints, Berger Paints, because these companies have been traditionally been very strong in their domains. So I think we'll have to see how distribution gets rolled out, what are the product segments, Grasim will initially enter, and whether it is going to be largely a B2B business, because what the market is understanding is that Ultratech has a very large dominance in the cement sector. And that is one distribution kind of chain which Grasim would like to capitalize. And therefore, the B2B business could be the first, kind of positioning which Grasim would like to sell their paints directly to the real estate builders or to the construction companies. I think on the B2C side, it would take a little longer. But I think clearly margins for both Asian Paints and Berger Paints could see a little bit of contraction, considering the fact that Grasim will try to disrupt the market. And I think this is definitely, interesting for the market, because after a very long time, we are seeing a very large dominant player who is going to invest a lot of money. I think 6,000 crores has been the initial investment. And the initial top line which the company has said is in the next 3 years, they're looking at a revenue of 10,000 crores. So they seem to be pretty serious, Niraj. But I think it's only a matter of time before we see the actual numbers flowing out, because it's not going to be an easy job to displace the market leader, that is Asian Paints.
They've said very clearly that, and in the press conference yesterday, that they want to exit the first quarter with a double-digit market share at least. They have come in aiming to be the second largest player. They're going to add 40% industry capacity. So it's not as if it's a small player coming in. It's going to attempt to challenge the incumbent. Going to be interesting for sure. Kush Bora is now with us. He's founder of kushbora.com. Very good morning to you, Kush. What a fantastic close we've had. And when you close at record highs, maybe on the charts and technically it might not be a big deal. Sentimentally, it absolutely is. So I want to get your sense of how much steam in this leg of the rally we're seeing on the Nifty and the Bank Nifty as well.
Sure. First of all, very good morning to you. And I think you've rightly put that, this has a more sentimental effect than, a very real portfolio kind of an effect, if I may put it that way also. Because we've not seen the mid caps and the small caps also participate. And even the new highs that we've been making for the last couple of sessions at least have not been big ones, right? And they've only been incremental. But that said, I think there's still a lot of steam for this rally. I think buy on dips is working beautifully, and till the level of 22,500 is hit, we will maintain that stance, or maybe if we slip below 21,800. But for now, the kind of moves that we are seeing on the Nifty and the participation from various sectors, Bank Nifty has sort of stemmed its fall, but then there are other sectors that are contributing. So I think there's still a lot of steam left. I don't think someone who's holding a long position here should be in a hurry to book out their profits. 22,500 is a very realistic target that we're seeing on the Nifty. If not, anytime sooner than by the end of March.
In a case where somebody is not long on the Nifty but wants to initiate a long position on the Nifty, would you recommend it at these levels?
Well, not precisely at these levels. Maybe like a 50, 100 point dip also closer to 22,000. As close as you can get to 22,000. Yesterday, actually, the Nifty slipped below that also. I would have taken some nerve to take a long position then. But from here on, since the risk-reward ratio may not be as favorable for a positional long position, closer to 22,000, perhaps even 22,100 would be a much better risk-reward ratio, and hence a buy-on-dips kind of strategy. And if I may, markets have been kind enough to provide those dips. It's just that it takes some nerve to buy when the markets are really falling the way they did yesterday.
Right, that's the call coming in on the Nifty. Also, Kush, before we go back into fundamental conversation, what are your top trades that you're recommending this morning?
A couple of them, both of them incidentally happen to be from the cash segment. One of them is Jio Financial Services. The stock had its fair share of ups and downs in the limited period that it's been listed. But on the whole, the trajectory seems upwards, and there is definitely buying in the stock. So from a target perspective, we're looking at a number of 313 and 325, 325 being the positional second target, and a stop loss comes in at 290. One more stock that has actually done rather well and has seen a very good delivery volume pickup and also a very relative price action movement is HFCL. This stock too has a lot of steam left in it. We believe a very convenient target, a very comfortable target would be 118 and 121, and a stop loss comes in at 112. However, if someone's willing to hold on to this positionally, 135 is also something that can be seen in the coming weeks or months time frame.
Absolutely. Avinash, just a word from you on what's happening in the IT space. Now, IT stocks have, completely turned the tide last couple of sessions. Yesterday, the Nifty IT up nearly 2%. You've had the likes of an HCL Tech Mahindra, all of them running up. Is there anything that you're liking in this space right now, Avinash?
No, I think within the IT pack, we still consider the mid-cap IT basket to be more interesting compared to the large caps. I think within this, we continue to be positive on stocks like KPIT, typically persistent. We believe, that these companies could definitely see a stronger traction in terms of their revenue mix, largely towards more emerging market segments like artificial intelligence, machine learning, because traditionally, IT sector is definitely going to find it more tougher now. In fact, what we have been hearing on the ground is that IT recruitments have been slowing down considerably. And that is now getting more impacted by most of the AI and machine learning kind of initiatives of most of the companies. So I think, whichever company is into AI, machine learning is definitely bound to do better. And I think Persistent has always been perceived to be a more product-oriented company. KPIT has got a strong niche in the automotive sector. So I would believe that any decline, or maybe even at the current level, if one were to look at a 12 to 15 month kind of time span, these companies have got healthy order books. And I think earnings trajectory for FY25 definitely looks quite better.
All right, so earnings trajectory for FY25 looks better, but a very important point that Avinash has made. The question is that which of our IT companies are really NVIDIA prepared, to put it in that context, considering that the talk of the day is a company that supplies chips to actually power these AI calculations and these computers. Are we anywhere close to that space? We'll come back to more on that, but meanwhile, shifting focus to key block deals from yesterday, and those are some of the counters that you should keep an eye on. Anushi joins us with that list.
Morning, Tamanna. So yesterday's focus was on Eureka Forbes after the Unilux stake sale, which happened. About 10% of equity was sold, which represents about 1.93 crore of shares at rupees 506.06 a piece. But over here, a lot of buyer interest has been shown. So just some of the key names that have come out in yesterday's block deal. So Goldman Sachs India has picked up about 1.21% of stake. Joining it is Morgan Stanley, picking up again about 1% stake, and Cassini Partners about 0.97% stake. There is also Plutus Wealth Management buying about 0.76% of the stake. So if you have to look at the key shareholder pattern of the business as well, which was last updated in December 23. So this promoter, Unilux, holds about 72.56% of stake at that period of time. Whereas in the other key shareholders, there's Antara India Evergreen Fund, which holds about 2.4% stake, and India Discovery Fund holding about 7.4% of the stake. Now moving on to the bulk deal in focus is RBL Bank, wherein Matthew Cyrek has bought about 0.54% of equity stake in the company by buying about 32.75 lakhs of shares. This was at a price of about 265.58 a piece. Again, over here, just to give some context on what kind of shareholders are in the business. So the mutual funds hold about 14.5% stake in the business in RBL Bank, while FPIs hold about 27.13% stake. That's the foreign portfolio investors. And Mahindra & Mahindra, which was the recent one, now holds about 3.5% stake in the company. So these two counters would be in focus, especially Eureka Forbes, with it seeing some beating yesterday. So with these new buyers in place, the stock action remains on a watch out.
So those are some of the companies in focus this morning. Thank you for that, Anushi. Let me go back to Avinash and Kush with RBL Bank, one of those counters that she mentioned. The banking space, anyway, very, very interesting, blow hot, blow cold, but you need the financials to definitely participate to, move to the next leg of this rally. And Avinash, I just wanted your take on RBL Bank specifically.
I think clearly, RBL Bank has seen a significant amount of re-rating, but I think going forward, Tamanna, my sense is that, it seems fairly well positioned both on the mid-sized corporate as well as on the SME book side, where the maximum amount of stress had come in. My sense is that over the next, 2 to 3 quarters, one could see a gradual recovery. And I think the markets are obviously pinpointing the fact that whatever asset quality concerns were earlier expected are unlikely now to happen and create a big damage on the balance sheet. So I would believe that, not only this block deal, but I think clearly some sort of smart buying has started coming in. And I think one could see a better kind of a performance picture, at least for the coming financial year. So I think it looks pretty interesting, but provided one has a slightly medium to long-term view here.
Avinash, this whole talk about, since October, actually, we've seen some of these OMCs do exceptionally well. Brokerages were very quick to come out with why they like them. You saw those upgrades rolling in every few days or every few days, actually. Now, last 2 days, there have been downgrades. Concerns have been raised. I'm not sure what's happening here. Are you a buyer? Are you a seller? What has changed so dramatically for the same brokerages to turn negative on the OMC pack within a few days?
No, I think, see, fundamentally, these companies will continue to do well because crude continues to trade at benign levels. But I think as elections get closer, I think there are very strong indications that the government could cut down petrol or diesel prices. And I think that could impact their profitability, at least in the short term. So we have been advising our clients that, wherever they have made a decent amount of money and a decent risk reward in these counters, I think it's better to book some money out here, because at least for the next few quarters or maybe few months, till the time the elections are not over, there are indications that elections could be announced in mid-April. And I think after that, obviously, there could be a little more volatility in these counters. So I think as of now, we don't suggest any fresh buying. But yes, I think at higher levels, one could definitely exit. And obviously later on, once the elections are over, one could definitely re-enter them.
On the charts, how do these OMCs, Kush, how do these OMCs look on the charts? Any trading strategy there?
Well, Samina, most of them have always been, a news-driven, trend kind of a play. And since the trend of late has sort of reversed, I wouldn't suggest any fresh trades here until, there are indications of any kind of fresh buying. For the last couple of sessions, that's not been the case. So while I will have GAIL and, IOC on my radar, I wouldn't really recommend a buy just yet. I would let them settle, give some indication of a fresh rally emerging, but up until then, if someone's holding, book profit and exit for now until, new trends emerge.
Okay. Now, the other thing is, Kush, for some of these stocks which have had such a stupendous rally in the last few days, are you booking profits? Tamanna was just telling me maybe a possibility of somebody throwing a caution on ABB, for example. So that's a great example. Let's talk about that. Has rallied so strongly. Is it hitting some resistance zones? Would you book profits here?
So, Niraj, it's very interesting that you asked me this. Just yesterday I was having this conversation where a lot of names, and I not ABB particularly, I'll come to ABB particularly, but a lot of these mid-cap and small-cap names that have actually done rather well. If you see what's happened is that, right now we're seeing some sort of divergences emerge on them where, they may need some sort of a fresh impetus to rally from here on, so the risk reward may not be favorable. So the overall mid-cap and small-cap space is something that we are exiting right now. We are booking profits. Of course, it's not a basket sell, but wherever we think that the run-ups kind of done, there's no fresh story emerging, there is no fresh momentum emerging, then we are booking a lot of booking out a lot of small cap and mid cap names. However, that said, there will always be some pockets which will have things going for them. ABB, the kind of sector that it is in, and also the fact that the stock has actually consolidated for a very long time, and then given a breakout yesterday on the back of very good volumes. In particular, ABB, I don't think there is any hurry to book profits. I won't be surprised to see 5,700 levels also on this stock in the coming weeks and months. So ABB is very clearly a stock which, if someone's holding, and holding through this consolidation phase, they should go ahead and ride this momentum, have a trailing stop loss in place. But overall, we are seeing some sort of cracks and some sort of resistances and divergences in the small cap and mid cap space.
Just keep in mind, viewers, so the momentum is in favor, but it's a 1,15,000 crore market cap, which has promised a lot of gains, yes. So the TTMP, trailing 12 months P, is about 93 times, but that hasn't deterred people. I mean, hotel stocks are like that. This one is like that. Yesterday, Electra Green Tech was up 7%. It's at $2,200. The trailing 12 months P is 170 times. So, well, valuations are one thing. Time for a short break. We'll be right back with the pre-open session.
back. You're watching India Market Open. Quick look at the implied open because we are just a minute and some change, few seconds away from the pre-open rate. So you're looking like you're going to open up in the green. And the question is that what is the mood going to be? Kush, you talked about your top picks, but I want to get your view on some of the big gainers from yesterday. Vodafone Idea, one of them. Some news coming in, but I don't know if it's enough to really justify the kind of upswing we've seen.
Well, that's the story of Vodafone Idea, isn't it? I mean, there are these pieces of news that keep coming in. The stock moves higher, but doesn't really sustain at higher levels. So, from my perspective, if there is any kind of a gap up opening, I would use that to book profits and get out. The recent high that the stock made of 18.5 might touch those levels, perhaps a little higher than those also. But then I don't see this as a sustained up move. At least that's not how it's been for the last, 3 to 5 months. So for me, any kind of an up move in Vodafone Idea would be an opportunity to book profit and take some money home.
Yeah. We've got a couple of minutes to gear, a minute to pre-open, and then of course a few more minutes to go as we gear up for trade market opening. It's expected to be a positive start. Implied Nifty is looking like it could be a gap up, an early trade at least this morning. Avinash, from everything that we've seen so far, any sort of company that you're currently constructive on, that you've got on your radar that we've not mentioned?
Samira, I think we are positive on a company called BLS International. It's one of the top visa processing companies in India. And I think it's got a monopoly kind of status in India, has a cash-rich status, and most importantly, earnings growth over the next couple of years is going to be extremely strong. Recently, one of their e-commerce companies went public, BLS e-commerce. And I think this company has also given them a lot of value upside in terms of their shareholding. I would not be surprised that we could see significant upside here, considering the fact that hotel and hospitality kind of companies are being re-rated quite significantly. And this is a play on hospitality. I would not be surprised that we could see levels of around 425, 450 over the next, say, 12 to 15 months. So this looks to be an interesting bet. And considering the kind of cash flows and the kind of, the kind of dividend payouts the company has been making, it definitely looks interesting at the current.
BLS International. Watch out for this one. Remember, the other one is BLS E-Services, which is separate. But BLS International is what Avinash Gorokshekhar seems to like. We'll talk about the pre-open rates once they kind of show signs of settling down, but it's very likely that we'll have a start which could be flattish to marginally positive. But a clutch of brokerage notes that have come in this morning, all of them on our website, on our ticker as well. But Harsh Sehta culls out the one or two most important ones for us daily. Today, Harsh has gotten one note, if I'm not wrong. Is it the Goldman Sachs on banks, Harsh?
Well, yes, absolutely, Niraj. Goldman Sachs on banks, a very, very interesting note coming through. What they seem to be suggesting is that there is more headwind now than tailwind. The Goldilocks period as such for the banking sector is at a close, is what Goldman seems to be hinting at. What they're suggesting is that there is pressure, one, from cost of funds, which are rising. Second, from consumer leverage, which has already risen, and therefore limited room or upside for growth maybe going forward. And third, there's plenty of OPEX pressure which is coming through. And that should lead to ROA moderation in the near term. But the positive or the flip side on this is that they seem to suggest that valuations within the banking space seem quite favorable, but limited room for upside. So what they're doing is they've had a slew of actions across banks. One, on SBI, ICICI, they've downgraded it from a buy to a neutral. 4% downside now on SBI after the kind of rally it has seen, and just about a 2 to 3% single-digit upside for ICICI Bank. Moving quickly forward on Yes Bank, they seem to have downgraded to a sell. 37% downside is what they see on Yes Bank. They've upgraded Bajaj Finance from a sell to a neutral. 2% upside is what they see there. The only room of comfort in a massive fashion that they see is within HDFC Bank. 33% upside with a buy rating is what Goldman Sachs' note is indicating. Also, the other one, Niraj, which is very interesting, is with regard to Vodafone Idea. Now, of course, Vodafone informed exchanges with regard to the board meeting to be held on 27th February to consider fundraise. fundraise across, across asset classes, or rather liability classes, what they're looking at, whether it's debt, equity, whatever it is, they're going to decide that on the 27th of February. But what they seem to suggest is the key piece here will be if the promoter infuses through a rights issue or not. That's one key piece that they are looking out for. Rather, Citi is looking out for. My apologies. So, neutral on Vodafone Idea, but what they seem to be suggesting is whether Vodafone, which currently holds 32%, will participate or not. AB Group will participate or not. They've committed some amount of support, of course, but how meaningful will that participation be will be something that they keep their eyes out on. As a knock-on effect to this, how does Indus Towers react to this will be something that we'll watch out for as we go into trade today. Indus Towers is on their radar, on Citi's radar. They have a positive catalyst on this, on expectations of both free cash flow generation as well as dividend reinstatement. So keep your eye out on that one as well.
Certainly.
Thank you, Harsh. A bunch of counters there. Vodafone, Indus Towers is what we want to keep on our radar. Kush, you want to come on Indus on the charts? 230 is what it looks like in pre-open trade. Is there a strategy there at all?
There's been a lot of chatter for sure, for a while now. 225 was one level that the stock was not able to, cross for the last 4 to 5 weeks. But I think if the gap up does come in at about 230 and it is able to sustain, the stock could very well rally to about 240 and thereabouts. So I think all the chatter might perhaps translate into price action also. But I'll wait for the stock to hold above the 230 level, since there is some sort of call base also. Could very well be that some profit booking does set in.
Interesting. Sorry, if I'm not wrong, I don't have a handle on whether Indus Tower is under the F&O ban or no. It at least was 2 days ago. Maybe it still is in the ban. So that's something that you got to keep in mind. Because you can't take F&O positions in this one, right?
Yes, it is.
It's in the F&O ban. Yeah, you can't take F&O positions, but cash market positions. Okay. Avinash, fundamentally, is Indus Tower a good investment candidate?
No, I think clearly, Niraj, within the the tower renting companies, Indus Tower is one of the larger players, and I think now with the 5G rollout expected from most of the key players, I think Indus Towers could definitely benefit significantly. But I think it's been a slow mover. Most importantly, my sense is that if one were to look at investment in this company, you have to take a longer term call because rentals across most of the tower renting companies have actually come down. So I think it's a matter of time. Once 5G rollout happens, you will require more towers and more kind of geographical presence. And that is where I think Indus Tower would definitely, have a significant amount of presence because its geographical reach is significant. So to that extent, yes, it's definitely a good, interesting opportunity, but from a longer term perspective.
Okay, good investment opportunity, but from a longer term perspective is what Avinash is saying. Actually, Avinash, coming on the other one, yesterday, this spiking up of Electra Green Tech at 2200 because of a large order, of course, 2400 buses. That's large for Electra, but stock was up about 6-7%. You look in the valuations of Electra or a JBM Auto or some of the others. If you had them in your portfolio, would you continue to stay invested or would you book profits, and why?
No, Niraj, I think clearly the narratives are playing out more importantly rather than the fundamentals. And I think, better sense would prevail if, one would actually take out some profits off the table. Because as you rightly mentioned, valuations have now touched record high levels. And I think if earnings growth does not come in, with the kind of order book which has been announced, I think now execution is very important. If there is any letdown in execution, that could lead to a big disappointment. So I think there's no doubt that going forward, the next 2 to 3 years, revenue visibility is very strong for companies like Electra or JBM Auto. But I think execution is very key. So I think it makes sense to at least book some profits off the table and remain invested, for the longer term. But yes, expensive valuation. So I think I would not buy at these levels.
Sure. Angel One, talk of fundraising plans, and the stock is seeing some action already in pre-open. Is this one looking good for a trade? Kush, yes.
Sure, the stock's been under pressure, has seen selling at every rise. So for me, if it does have some sort of a gap up opening, I think, most of the trading gains will be lost. So 3200 and then, 3300, both these levels where the 20 and the 50 DMA reside. Uh, as I said, selling pressures, I will not consider it. Once the up until the 3300 level is taken out and convincingly, because despite the sharp run up that we'd seen a while ago, the stock seeing some selling pressure, at higher levels. So for me, just for now, this will be a wait and watch kind of a trade.
Okay, well, the pre-open rates have settled, and as the pre-open rates have settled, it seems that we'll have a start which is about 72 odd points in the green, so knocking on the doors of 22,300, which is, well, not a bad thing at all, and a clutch of names moving around. Wonder if Sona Comstar has made a move in the pre-open session, should bring them up about 5% higher on the PLI win. And we should also pull up Dilip Buildcon for whatever it's worth, a small order win. I wonder if that stock has gained a little bit. But Sona clearly is the top mover on the BSE 500 on open. The RBL Bank is the other one that I think Tamanna was talking about, up about 3.5%. Yeah, so small gains for a few stocks. Nothing too dramatic, I have to say. Avinash, did you look at this PLI win for Sona and what would it mean? It's, again, a very expensive stock, but continues to deliver on results at least. Does this PLI victory move the needle materially for Sona?
No, I think, Niraj, it will definitely impact them positively over the longer term. But I think in the very near term, I think most of the positives are already there into the price. So I would not be a buyer at these levels. Would prefer to wait for a mild correction. But yes, longer term, I think, the kind of positioning Sona BLW has in the electric vehicle space, it definitely has a niche positioning, has a very good order book. And I think at least for the next 2 years, order book is very strong. Revenue visibility continues to be strong. So I would believe, it's always good to buy such kind of stocks on declines. At these levels, I think valuations definitely appear to little pricey.
Again, you have another good day of trade for IT stocks today. And an emphasis, L&T Tech, Persistent, all with some very, very smart moves that you're seeing panning out. Reality also not doing too badly in trade today. Kush, you gave us your top picks before the pre-open session. Anything that you want to add to that list?
So a Nozzle is something that I have on my radar. The stock's been a little volatile, but it's taken a 20-day moving average support and attempting a rebound. So that's one stock that I will have on my radar. From a near-term perspective, 295 and 310 are the targets that I can look at, and on the downside, 270 where the 20-day moving average resides. That could be a stop loss. So Nozzle, despite the volatility, does seem like has some more room on the upside.
Well, just a quick mention. Remember, the liquidity in the banking system has remained tight, and the RBI has conducted a slew of variable repo rate auctions to ease the liquidity in the system. The last one was conducted on the 12th of Feb. There's one that is going to be conducted as of 29th of Feb. The RBI has, of course, notified the exchanges. The amount that will be done in this auction will be about 1.5 lakh crore. But remember, the liquidity deficit in the system has widened quite significantly to 2.5 trillion rupees on Wednesday. This is the latest data that we have, that the RBI has given. This comes in despite number of VRR auctions that they have been conducting over the course of the last 6 to 8 weeks. So just worth a mention, guys, liquidity is still tight. No amount of VRR seems to be easing that in the system for now, and that is something we need to be a little mindful of.
It makes the case for an earlier rate cut even stronger. And if you see the Jeffries note on the minutes, on the MPC minutes, they're saying the same thing, that they look at an RBI rate cut possibly by August. Important point to watch. But just about 2.5 minutes to, trade. And the question is, are we going to hit 22,300 today? It's not something which is unusual. You're just about 10 points away. And the fact is that all of these runs are coming mainly on the back of DII buys. Your domestic investors are coming in. Your FIIs have not even come in as of yet. Avinash, I just want to get a take from you on what would be your biggest plays in a market like this right now? Would you still be accumulating? If yes, in what spaces?
Well, I think clearly, in this kind of markets, one has to hunt into stocks which are not identified. I think clearly, as I told you, hotel and hospitality stocks still continue to be on our radar. EIH Limited is one interesting opportunity according to us. We believe that, considering the fact that most of the hotel stocks have multiplied quite significantly, here also the geographical presence and the kind of profitability recorded by EIH deserves a significant amount of re-rating even from the current odd levels. And of course, from the traditional auto and auto component sectors, we still continue to be positive on stocks like Tata Motors, Ashok Leyland, and Mahindra. So I think, any dip in the markets, Tamanna, is always a good time to accumulate. At these levels, you've got to be very selective. But I think EIH definitely stands out. So we would be buying EIH even at the current odd levels.
Okay. Kush, maybe you already gave that call and you've given your stock ideas. But if I had to press you for one key stock recommendation that people can take at 9:15, you already have the benefit of the pre-open rates and how the stocks will start. What would that one stock idea be?
Geo Financial Services.
JFS. And what are the targets? What are the stop losses, if you will?
Positionally, 325 is a number that you can have as a target, and 290 is where I would place my stop loss.
297 and 325 US. So the risk reward quite favorable from a stop loss and a target perspective. Watch out for JFS. Samina was telling me that it's had a fabulous run in the recent past as well. We'll maybe try and highlight that stock on open today as well. It's starting off flattish. So if you believe in the idea, if you like the call, there's a chance to buy it because it's not really opened up too high. But here are the first rates on this Friday morning. About 80 odd points on open. So not a bad start, by the way. 22268. We are about 35 points away from 22,300 for whatever it's worth. Bring up the Bank Nifty. Actually flattening out now, and the Bank Nifty too, just about flattish, 0.19, 0.15% higher. Maybe the mid caps and the small caps could be doing better. Let's pull them up. About 0.5% for the mid cap index, so that's not bad. And the small cap index about 0.5% too. So good start really at the broader end of the spectrum for sure. Bring up the heat map and let's just first see what the large caps are doing. Grasim. While yesterday was a bit volatile really for Grasim, today it starts off positively again. Some strength for LTI Mindtree, some strength for Hero MotoCorp. There is, Tech seems to be doing okay. Yesterday Tech was the big winner, and today too LTI Mindtree, Tech Mahindra, HCL Tech are all in the green. HDFC Bank is about 0.5% in the green. More green than red, so that's the key point. On the losing side, I don't know if it's got the Vodafone Idea impact, but Bharti Airtel a little bit off today. I think there's some individual news flow too, but I would take cognizance of the City note which spoke about how a successful fundraise for Vodafone Idea could be a sentiment negative for Bharti Airtel. I think that's what's playing out right now. Asian Paints reels yet again about 1% lower. Britannia about 0.5%. Yeah, but nothing too dramatic. In fact, I think Grasim is cooled off as well. So the top gainer is Hero Moto. The top loser is Asian Paints. That's about the news flow on the large cap end, but clearly the story at the mid cap and the broader end of the spectrum.
Absolutely, and a reversal for Hero Moto after spending many days at the bottom of that chart. But yes, the broader markets are showing all of the action as they must, because people looking at their portfolio and seeing markets at all-time highs are wondering what's happening with their money. And yes, absolutely, the Nifty has opened at record highs. But Vodafone Idea, one of those stocks that are on our radar, again, in the telecom space, are we going to be seeing some fund infusion? The promoters have made it clear they're not exiting that business, at least for now. And that has been a stock which has been trending on the charts, continues on today's trade as well, up about 5% on the back of another 5 to 6% gain yesterday. Citi, of course, has maintained a neutral stance on Vodafone. Electra Green Tech is another company that we talked about. A big order that they've got. Those who are familiar with the Mumbai BEST buses know that they're going green, they're going EV, and they've given them a 2,400 e-buses order, and that's a big one for the size of Electra Green Tech, the company being rewarded with a 4% upside in open trade. IRCTC, they've tied up with Swiggy. There will be deliveries at certain select stations to begin with. That stock not doing too badly in open traders at all, about 2% up. Pratap Snacks is the other one that we're tracking. It was on a high yesterday. After news reports that ITC will buy stake, post-market hours, the company clarified in an exchange note that there's no such conversation going on. That stock now sliding down about 3.5%. Pesa Low, this small cap NBFC, has been in the news. They've now given a nod. Their board has given a nod for a QIP raise of about 1,200 crores, 1,260 crores to be precise. That stock is up. And Salsar Technologies, one of the big gainers in trade yesterday was Salsar. So there is a joint venture with RVNL, where they've emerged as the lowest bidder for a Madhya Pradesh power transmission company. So you're seeing both those stocks do well. For Salsar, remember, it's a second day in a row with solid gains. But so many more buzzers in the market today.
Indeed, a little bit of trend kicking out. So you've got your Birla Group companies that are doing well. You mentioned Vodafone. Indus Tower is the other one. Sentimentally positive on back of those fundraising plans. While Vodafone is up 7%, Indus Tower not too far behind, seeing a gain of about 4% as we see it. Textile companies aren't doing too badly. So Welspun is up sharply this morning, 5% gains. It's the second biggest gain on the Nifty 500. That is followed by Gokuldas. So if you can get Gokuldas exports, let's pull that up. That counter 2 is seeing an up move. That's the Nifty on the screen, but Gokuldas is up 7%, and Welspun as well is trading with a gain of 3 to 4%. You've also got Archean Chemical. Now, this one has been on the radar all through last week. It's a specialty chemical player. Results were good. There were a couple of brokerages as well that were constructive on Archean. The stock once again trading well this morning. 3% rally is what we are seeing on the stock. Well, IRCTC, Tamanna has already mentioned. Texmaco has also got fundraising plans. Watch out for that one. Angel, the 2.5% on Texmaco. Angel One has also approved fundraising plans. The stock not reacting too much to that just yet. IRB Infra in that same breath raised funds, so the stock will be one to watch. The markets don't seem pleased. The counter sees a little bit of weakness in early trade. Well, you've also had a block deal that's happened. Kolte Patil has seen 1.8% of equity change hands in a pretty big bunch. The stock is unperturbed for now, 0.9% higher. Apart from that, Salsar Tech, Tamanna mentioned this one. The stock is up on a big order win. Dreamfolks is also trading higher with a 2% gain as we see it. Well, Electra, Green Tech, all those counters looking good in trade. Quick one on Geo Financial. Kush had a buy call on this one. The stock is up over 25% in the last few weeks. This morning, it's looking good again. Nearly 4% on GeoFin is what we've got. But anything else, Niraj, is this big shock element on his face?
No, not a shock element. Just saying that it's a great call that has happened.
Yeah.
And sorry.
Talking about that, I think you should also get a view on Swan from Kush, because that was the other one.
Yeah, but I think because of the fund rights issue, I think Swan has become a bit subdued.
There's been some pressure on it, but yeah, great move on.
Yeah, Kush, good call there. Though, can people buy it now? JFS.
Sure, Niraj and Samina. First, thanks for acknowledging and highlighting this. A one-word answer: yes, you can. It's just that don't be in this for a trading move now. Get into this positionally. Perhaps 350 is the kind of target that you should look at if you're looking at it from an investment perspective. And the stop loss does come in at about 290. The number that I mentioned earlier. So even now, but from an investment standpoint, not just a trading call.
All right. Okay, trading call. It's not just that, it's more than that in investment standpoint as well. Thank you so much, Avinash and Kush, for speaking with us today and joining us on the first leg of the show. We're off to a strong start on the markets despite, a run-up through most of the week. So yes, a fabulous Friday. Will we hold on to those gains is definitely a question that's important. But where do you go next in a market like this? Mihir Vora is now with us. He's CIO at Trust Mutual Fund, joining us, a special guest on the show. Mihir, very good morning to you. Great to speak with you. At a time when really an important question that got raised in our conversations when we started the show today was that viewers, investors, individuals would be looking at all of this coverage, reading every day that markets are all-time highs, and then looking at their own portfolios and wondering whether it's keeping up, because broader markets have not necessarily participated. For you, where does the challenge lie now in finding value in a market like this?
Hi, good morning. Always a pleasure to be on your show. I don't know why you say that the broader market has not rallied. Look at the mid-cap and small-cap indices, even the micro-caps. they are at highs. So there is, I think, a broad-based participation. Yes, some sectors have not moved. For example, banks have not moved. But apart from that, I think there is a lot of action in the market. So it is a broad-based rally, and I think everybody's making money. I mean, not the traders, but the investors.
Yeah, we were having this discussion in the morning. For the last couple of months now, we've constantly talked about how large cap needs to participate. It needs to lead the way up. Banks will see the FI interest. Now, FIs are clearly at bay for now. Does your portfolio, if I had to ask you, have you rechecked your portfolio? And if yes, have you gone sort of overweight on large caps, reduced your weightage on the broader markets? What is the strategy that an investor should be adopting? A little bit of rebalancing is required, I'd imagine.
I think, yes, but the themes remain broadly the same. We are more positive on the domestic economy growth. Only caveat is that consumption is taking a little longer than expected to pick up. So that's where we are kind of in a bit of a question mark. But I think the PLI story, the CapEx revival story is gradually panning out, and we should see that theme, develop. I would say the one big confusing area is large cap IT services. On one hand, last couple of quarters, we have seen no headcount addition. We have seen disappointments in the large companies' results. Small mid caps have been doing well in the IT services. But on the other hand, with the NASDAQ and the US economy showing no signs of slowdown, we are wondering where the disconnect is. So this is one space, I think, where there's a little bit of a gap between the US market performance, the US economic performance, and from what the IT service companies are saying, the large ones. And the other confusing area, I would say, or where we can find opportunities, is in private sector banks versus PSU banks. The PSU banks have caught up a lot versus private sector banks. Private sector banks have underperformed. But now I think we are on an even keel, and probably with valuations being reasonable on the private sector side, that's where some pocket of value can emerge.
Interesting. Good morning, Niraj here. Thanks for taking the time out. So between those buckets, which is PSU banks, which are still maybe have caught up on valuations, but not that expensive, private banks, which are a lot more inexpensive relative to history, but maybe looking at NIM contraction, and suddenly the notes from the sell side talking about going long on NBFCs because the corrective move has played out. What would be top of the pecking order for you?
I'd say right now we are even. If you look at NBFCs versus PSU banks versus private sector banks, I don't really see a very sharp case for any of those underweight or overweight. I think the whole segment has underperformed, I would overall, and it is time for the financials pack to now start contributing to the market more.
Got it. Meet about 6 months ago, you were amongst the first ones to point out that chemicals were ignored for a long time, and at some point of time, things will catch up. We're starting to see the first signs of that in corporate commentary, at least. I think the China activity just starting off a little bit has also brought about some uptick in some of those base chemicals too. Is this the right time to now enter into some of the select chemical names? And if so, because it's such a wide bucket, please help our viewers understand how do you go about choosing which chemistry, which company, so on and so forth, or which vertical to bet on?
Sure. So in chemicals, as you rightly mentioned, each company is different, similar to pharmaceuticals, where each company is different set of products, etc. But right now, what we are more focused is on specialty chemicals, companies which are not necessarily the largest in their field in the global scheme of things, in terms of absolute size, but they may be large in one or two products where they have niche skills, so to say. So special and niche chemicals is something that we are biased towards. And more importantly, what we are looking for is companies where they already have announced and are executing significant volume expansions. So in chemicals, we are looking at niche companies with significant volume expansion already on board, because we think margins probably have bottomed out. So we are now not really looking at big margin expansions, but looking at volume growth. And then volume growth, since it takes 2 to 3 years for new capacity to come up, we are looking at companies which had announced plans 2-3 years ago, and now those plants are coming on stream.
All right, Mihir, just to pick up where on the point that you talked about, that the broader markets have been going up, and you're absolutely right that you have seen the indices going up. The question is this translating into people's portfolios? And you're the right person to answer that question in terms of, are valuations beginning to bother you? Are you having to hunt harder for fresh opportunities in the broader markets and in these spaces?
Oh, absolutely. With stocks having run up so fast in most of the popular segments, life is not as easy as it was 1 year ago. I would say the confluence of growth and valuations, the number of stocks where there's a confluence of growth and valuations being both on the reasonable side is reducing for sure. So we do have to work harder than last year for sure.
In these segments, I want to get your take on PSU companies. I know you talked about PSU banks, but PSU banks seems to be a different story altogether, which is, in a differential cycle. But ahead of the elections, you typically see a lot of focus on PSUs. You're expecting the capex cycle to continue. That's tinged with a bit of concern about whether some of these have run up ahead of their abilities. Could you drill down on this space and where you seem bothered with some of these companies and their run-up?
Sure. So PSUs again are across the spectrum as far as sectors are concerned. So not right to make a sweeping statement. But if you look at the broad categories, one is the commodities piece, where you have coal miners, you have the OMCs, you have the oil upstream. Their valuations are still not that expensive. So there we should play for some volume growth and mostly the commodity cycle. So these are not structural longs, but if you believe that oil is going up or there'll be some more demand for coal, etc., then you can play the value game, and there is some still value play to be had on in the commodities and the energy side PSUs. In the utility space, again, some of them are doing a good job of expanding their range to not only traditional sources of energy, but renewables. So there is a scope for re-rating, and I think there is a big fancy for green linked companies, which was not the case earlier. So there is still some scope for re-rating there. On the defense PSU side, I think we are in for a new paradigm where it's a new business model altogether, where government is now pushing for local manufacturing as well as exports. I think there is a long runway there possible for the next many years. So that's both the private and public sector defense paradigm, long runway, I would say. I'm bothered about some of the pockets of PSUs where it's a bunch of sectors, not one sector, but these are PSUs with very low floating stock, very, very low floating stock. There has been a real bit of a real amount of retail frenzy and trading, unreal kind of volumes and unreal valuations in a lot of these cases. I would be very worried about those stocks.
See, would LIC be one of them? Which ones would you see as a concern? And I'm talking about LIC because that's the perfect example. It's broken out now finally, and even come back to its IPO levels after a while. Gone up about 20-21% in a month. Yes, low floating stock. Of course, there will be others on the list. What do you do in a space like this?
Yeah, that's what I'm saying. So look at valuations, and the stocks that we talked about are mostly not that large cap. They are PSUs, but not that large cap with low float stock. So there's been a lot of frenzy around those, and some of them actually, because there's no floating stock, are no longer even mid cap. They have become large caps, but the valuations actually should have been mid cap valuations.
Okay. Mihir, the consensus view seems to be on pharmaceuticals and healthcare. I'm just trying to understand. You spoke about chemicals as being this disparate industry, much like healthcare. Trying to understand very wide bucket healthcare to 4-5 different buckets, including hospitals, diagnostics, Indian pharma, global pharma. What's your sense? Are you constructive there? And if so, what vertical within healthcare?
Oh, actually, apart from diagnostics, and that also diagnostics also has a few interesting plays. But broadly, I am not that positive on diagnostics. But hospitals and domestic oriented pharma as well as global pharma, I'm actually positive on all the segments, especially the the export-oriented pharma or pharma with a lot of international business has had a period of almost 5-6 years of correction or underperformance versus the market. And for good reasons, each company had its own bunch of issues, FDA issues, generic pricing coming down. But I think we are, I think, towards the peak of that negativity. And companies in the international space, in the generic space, as well as API are not able to sustain these margins anymore. So we are seeing a much less price erosion in generics. And Indians are anyway the most competitive drug and formulations produced in the world. So we are the last man standing. And now I think we are going to benefit from the uptick or at least reduction of generic price erosion. The domestic formulations market was always doing well. So that secular story continues. But I think the main thesis is that generic prices has come off, price erosion has come down significantly, and Indian companies are now set to benefit. Most of them have had FDA issues which have been gradually resolved or are in the process of resolving. So even the peak of the negative news on FDA plant issues are also probably past us, and next few years should see a good amount of action in the pharmaceutical space.
Okay. Mir, any risks on the horizon, macro risks in terms of rates getting pushed out or otherwise? Because the flash PMI data seems to indicate that activity is okay in India. So the risk, is it economic led or is it more a case of what the Reserve Bank of India could or could not do?
See, I've never seen interest rates impact the economic growth or the stock market for that matter, frankly. The bond market reacts to it much more. But typically, if interest rates are rising, it's because growth is strong or inflation is high or both. Right now, inflation is expected to hover around 4.5 to 5 for the next 1 year, which is in some kind of comfort zone. And GDP growth is also sanguine. So I don't think there is any need for the RBI to do anything shocking or surprise us negatively. And if these levels of interest rates continue to be stable, then I think growth will continue. So I don't see any risk from the macro side as far as India is concerned. The more persisting or the more concerning area is what we are seeing in the Red Sea. Bottlenecks and transportation costs are rising. We are beginning to see some impact in some stocks and sectors because of larger transit times to Europe, especially. I heard the news that Indian refiners are now diverting traffic to their product to Asia rather than Europe because it's becoming a little more expensive to transport via the Cape of Good Hope instead of the Red Sea. So those are the things that I would look out for.
Just the election is going to be in about maybe 3 months, and for some reason it's become a bit of a non-event. Actually, the reason is pretty clear because
market's already celebrating the election.
The result is already set in. I was speaking to an analyst the other day, Mihir, who said that the pre-election rally has already begun. Would you say that's what we're seeing right now?
I think, as I was saying, the market's probably not even considering any other outcome except continuation of the regime, and that also in a comfortable way. So that, as you rightly said, is a non-event, and what we are seeing right now is India participating on its own strengths of economic expectations, and the fact that the US especially has surprised on the positive side. So the way the US economy is resilient, and even there the markets and indices are scaling new highs. We are seeing a continuation of the bull run because of local as well as global factors.
So considering that you technically or usually do see a bit of a pre-election rally, post-elections, we see the reverse, a bout of sell-off. Do you think that that's what we might be seeing come June, June?
So that will be a function of, see, right now, as I said in the beginning of the show, there is a little bit of disappointment on consumption growth. And the markets are still holding up. Even consumption stocks are holding up in the expectation that second half will be better. So if by June we see that there is absolutely no traction on consumption and expectations for the second half start getting tapered down, that might be a risk. I don't think election pre or post is that much of a risk. But what expectations pan out for the second half is more important.
Absolutely. So, interesting set of events coming up in the year. Fed rate, pre-post election rally or sell-off as we may see it. And of course, like we've seen in the last few years, you never know what's on the horizon, especially geopolitically. But right now, we are looking at a positive trend, at least as far as Indian markets are concerned. Thank you so much, Mihir Vora, for speaking with us today.
Always a pleasure.
We'll take a very short break, but on the other side, we're talking to the top management of Jammu and Kashmir Bank on their fundraise, their plans ahead, and what has made this bank tick. All of that coming up.
back with India Market Open and get in a bank which has had a terrific performance on multiple counts over the last few years. J&K Bank's gross NPAs have declined or halved from what they were maybe 5 years ago. Capital adequacy ratios are looking strong. Advances growth has been pretty strong as well over the last 4 or 8 quarters. Pretty decent performance on annualized ROAs. And a lot of people believe that with the funding in place and the stability in the region, there might be merit in the kind of business growth that the bank could do, which the bank itself has laid out targets over the course of the last 4 quarters. Let's get in Mr. Baldev Prakash, Chairman and MD of J&K Bank, to talk about what's next in calendar year 24. Mr. Prakash, good having you. Thanks for joining in. Just tell us, you've done 9 months and the numbers speak for themselves. What does the street expect? What can the street expect from you over the course of 2024?
Yeah. Good morning, Niraj. So one thing is there that in the month of April and May, what guidance we have given to the investors, we will be definitely meeting those guidance, rather surpassing in many areas. The bank has done extremely well as far as business growth is concerned, and we have been able to improve the assets quality of the bank also, and the profitability of the bank on a quarter-on-quarter basis has seen an uptick which has never happened in the history of the bank. This year, I'm very confident we are going to create another sort of record as far as the profit after tax is concerned.
No, I mean, those records, obviously, Mr. Prakash, will keep on happening as your base goes up. But I'm just trying to understand with regards to the quantum of growth, the earlier expectation was that FY24 you grow at 15%, a loan growth at least, and maybe advances pick up over the course of the next few years, because the targets that you laid out in multiple interactions as well as formally for FY27 or 28 are very stiff. So I'm just trying to understand, one, are you on track for all of that with the 20% odd advances growth? And would these growth targets happen with asset quality remaining pristine?
Yeah. So there are 2 aspects. I would reply your question in 2 ways. One is that how my home territory is doing. So my home territory, Jammu and Kashmir and Ladakh, these territories are seeing the growth which is unprecedented. This could be because of the dividend of peace also, and the type of investment which we are seeing is something which encourages us that the overall economy will improve. Then the overall economy will improve. Obviously, the bank will get the share because we are having the market share here more than 67%. So that is one confidence, and the other is that the rest of the India book, which were having problems because of the quality of assets, now that is past us, and the rest of India book, where we are a niche player as far as the corporate book is concerned, corporate book of high quality PSUs or high rated companies, and we are also now doing a good amount of home loan in rest of the country. So given both these territories which are doing very well, I'm very confident that we will be definitely meeting the numbers which we have already committed.
Okay. Good morning, Mr. Prakash. Let's just talk a bit about the quarter gone by, and, we're over the results season, etc. But was Q3 a little more challenging? You saw margins contract marginally, slippages increase marginally. Of course, quarter on quarter, not year on year. Year on year, you're still looking strong. I just want to get a sense of what were the challenges in this quarter, which are possibly broad-based, because we saw all banks, look at cost of deposits go up, etc. What has that story been for J&K Bank?
Yeah. So Tamanna, you have very rightly said this is an industry-wide phenomena as far as the cost of deposit is concerned. There could be many factors, but mainly I think it is the internal cannibalization, because the CASA is shifting towards term deposit, as well as some of the deposits are also going towards the capital markets. So this is what is happening across the industry, but definitely we are much better placed because we are still holding a CASA of above 50%, which is a unique. So I'm very sure that we will be continue maintaining our this percentage of CASA and going forward also. And this has been this confidence is coming from the steps which we have taken in the recent past. I am very happy to tell you that the QR code and the POS given to the traders is we have done a phenomenal job in the last 2-3 months, and more than 400 QR codes have been given to the traders. Obviously, the entire money will be routed through CASA accounts. And the other challenge was, as you have told, that it is relating to the assets quality. I think assets quality has been a biggest success story of the bank. And the slippage ratio over the period of time, which we are seeing, hardly 1.25% slippage ratio. So, which is one of the best in the industry. So, from that point of view, we don't find any challenge as far as maintaining our guidance in at 4.5% of our gross NPA. And this 4.5%, I'm saying exclusive recoveries only. There's no technical write-off is included in this. So this is pure recoveries. So I'm very sure that fundamentally we are doing things in the right manner, and we will be definitely doing much better going forward on a quarter-on-quarter basis, also on the yearly basis also.
Well, let me come to the point you made on your CASA ratios and how, you know, the whole QR code merchant sort of pipeline is coming through to them. And there's a bigger story here, which Niraj and I also were discussing earlier. The stability that you're seeing environmentally in the region, is that also sort of a big tailwind for you? And that is what is also fueling growth.
The biggest thing is happening is now the tourism is at a record level. Lot of tourists are coming to the valley, and because of tourism, not only the hospitality sector, which is getting positive impact, but entire ecosystem, the shikara, the small businesses, the restaurants, and everybody is getting benefit of that. And if you see the major QR code, if you see in the entire area, in entire valley and entire J&K, you will find that JK Bank is the predominant player as far as QR code is concerned. And this has happened in a very recent time. So obviously this we have done keeping in view the challenge we are facing in CASA, and I'm very sure that we will be successful in maintaining our CASA above
50%. I'm inclined to come back to the positivity around the valley and the resultant impact of that, Mr. Prakash. You are looking to expand to bigger metros, but J&K is your forte. Just trying to understand what will the differential in growth rates be between what you do in the valley versus what you do elsewhere. Can you break it down for us?
So, Niraj, if we see last year, I was telling that our rest of India book will be growing better than our home territory, that is J&K and Ladakh. But now, keeping in view the increased economic activity in our home territory, we are seeing that growth is coming from J&K and Ladakh also, as well as rest of India. So what I'm saying, the growth percentage per se for both the territories looks like almost equal for us. And I think that is what we are seeing as far as the expansion is concerned. 60% of the expansion will be happening in the rest of the India territories, and 40% will be happening in our home territory. In our home territory, of course, it will be driven by two factors. One, of course, the financial inclusion, because we are the leading bank. So first responsibility of financial inclusion comes to the Jammu and Kashmir Bank, and the rest other will be the strategic branches, which will be driven by various demands of business coming.
Okay, so therefore, this guidance that you had given at the start of the year, right, that in 5 years you will be PAT of maybe 4,000 crores, if I'm not wrong. Gross NPAs will be lower than 4.5 by end FY24. And I heard you say at the start of this conversation that you will improve upon some of these metrics. You're sounding very constructive on rest of India and J&K growth as well. Are you revising any of the targets on gross NPAs for FY24 or the years ahead, on the PAT targets that you laid out maybe for FY28? Are you revising any of these targets?
As of now, Niraj, we are not looking to revise these targets, but we believe that we should deliver better than what we promise. and on both the counts which you have referred, and more than that, in all areas where we have given the guidance, we are working we are working to improve whatever we have guided to our investors.
I agree. On the profit side, let's assume the targets are tall. You don't want to overexcite, etc. What about asset quality? 4.5% in FY24 is a good achievement from what it used to be. Nowhere close to what it ideally should be. Mr. Prakash, and I'm guessing you will admit that too. And I agree it's a slow process. Just trying to understand, how do you anticipate the trajectory around NPS to be, let's say, for the next 2 years?
Yes. So this year it will be definitely less than 4.5%.
Sure.
And 4.5% exclusive recoveries only. There's no technical write-off included in this. So going forward, next year we are targeting 3%, and then to be among the best banks in the country going forward, FY 2025 onwards.
Just one last question, Mr. Prakash. I'm trying to understand all of the government spends in the region. How much of that gets pushed through a J&K bank? So, for example, recently Prime Minister Modi came to the region. He's announced projects worth 32,000 crore rupees. Is this beneficial to your bank in any way?
So there are two parts to this, Tamanna. One is that the big infrastructure projects which are coming, those projects directly we are not having much exposure to those companies, but indirectly by way of a subcontracts, because subcontracts goes to the local population. So those are funded by us in the form of equipment and other small things. And other areas like the agriculture and the other infrastructure, because J&K Bank is the agency bank for government of Jammu and Kashmir and Ladakh. So because of that position also, we get a lot of business by way of from both the governments.
All right. So that's an interesting perspective. Thank you so much, Mr. Prakash, for speaking with us here on NDTV Profit. That's the chairman of J&K Bank speaking with us here. That's a wrap on India Market Open, but stay tuned. Talking Point up next.